In those two areas, in only about 4,000 meters of drilling, we identified 1.5 kilometers of new mineralization. So similar mineralization to what we see in that 965,000 ounce 223 deposit, generally broader continuous mineralization starting from around 40 meters depth, with some higher grade intercepts in there that may suggest, higher grade pockets that provide for optimization and development.
Well, hello, welcome to Assay TV. Today, I'm joined by Alex Scanlon, who is the Managing Director and CEO of Barton Gold, a South Australia-focused gold explorer, which listed in June 2021. Alex, great to see you today. If you could start things off, this is the first time we've had a chance to have a chat. If you could tell our listeners a little bit about the sort of strategy for Barton Gold. As I mentioned, listed last year, you're focused on South Australia, on gold. You've got some brownfield projects. You've got some exciting new exploration projects. Tell us a little bit about the company and where you hope to take it.
Yeah, no, thanks for having us. Look, a very high level summary, Barton Gold is essentially a very pure play South Australia gold focused company. And we've consolidated about 4,600 square kilometers of tenements and gold rights in the central Gawler Craton of South Australia. The reason we've chosen to focus there is that it's an area that's been historically underexplored and underinvested, owing to a number of factors, but those include, for example, the fascination with Western Australia, but also the challenges of exploring undercover. And what we're doing is bringing a much more regimented, systematic exploration process to that region of South Australia. And we're pairing that with a lot of advanced and new technologies. So trialing a lot of existing and novel technologies in this area to basically unlock the challenge or unlock the region in respect of the challenges of exploring undercover. So we've had a lot of success since listing and doing that. In terms of where we're going, we're really focused on our Tarkula and Tonkelia projects. So we have what we call two project hubs. Our northern hub, we own the only gold mill in the region, which provides us a nice strategic advantage over the medium and long term. It also provides us some leverage looking at our main southern hub, and that's where Tarkula and Tonkelia sit.
And you mentioned, this existing mill that you've got up in your northern hub there. How do you see that fitting in with a sort of long-term strategy of your company? Is that to sort of start things off, or how do you see that working?
Yeah, look, I think we're pretty careful to emphasize that we're not focused on a quick mill restart. Certainly that mill performs very nicely. It was operating until September 2018. It's a 650,000 ton per annum plant, and it operates with 94.5% recovery. So it's a very productive piece of infrastructure. And we have the potential to take mineralization from Tarkula and put it through that mill. So in some sense, we have the option of not needing to worry about building a mill. We only need to worry about filling the mill that we already have. But if we take a step back and focus on the bigger picture, which is very much our strategy, we're really focused on that southern hub being the combination of Tarkula and Tonkelia and putting together a multi-million ounce platform there that we can wrap that up and say, this is going to be a very significant gold producer. And it just so happens that our existing mill can provide us early stage operational leverage because we can start, for example, a stage 1 operation processing higher grade ore from Tarkula while we're developing a new mill at Tunkillia. Tunkillia is very broad, very consistent, large scale mineralization. And it's very likely that will serve as the sort of overarching or underlying large-scale baseload mineralization for a large-scale operation, with Tarkula effectively acting as a high-grade satellite, feeding that from about 70 kilometers away.
Well, let's talk about those projects in more detail. Tunkillia, it had a JORC resource already when you went at the time that you listed, but you've done some pretty aggressive exploration on that in 2021. Tell us a little bit about what you've done and the sort of shape of the project and how it's developing.
Yeah, Craig, look, Tonkelia is a very exciting asset, and it's one that we think has probably been heavily overlooked for a very long period of time. It was discovered by Helix Resources back in 1995 and early 1996. And that actually was coincident with the discovery of the Challenger gold mine, gold deposit, I should say, back in 1996. So a fair amount of interest came into South Australia and a fair amount of activity was undertaken. And the result of that was the discovery or the definition of that 223 deposit that is there at Tunkillia. Unfortunately, the end of the 1990s, the gold price declined and people went off to easier areas to explore with greater outcropping mineralization. And from the year 2000 onward, the various owners of Tunkillia essentially just focused all of their drilling on infilling that 223 deposit. So there is a huge amount of area around there and a lot of historical data, which provides a very high value roadmap. And we're essentially picking apart that roadmap, going back to the raw data, bringing in new technology, and basically targeting rapid growth of this area. So when we were looking at the project originally, it originally had about a 558,000 ounce resource. That was about 60% indicated. We had a look at it and recognized that there was some inconsistency in the data with the sort of results, if you will. And we pulled it apart all the way down to the raw data, did a full QA/QC analysis. We discarded about a third of the overall drilling data, and we remodeled it with much stricter outer wireframe, much higher outer wireframe grade cutoffs, as well as proper subdomaining. And what we discovered was that the mineralization, the style of mineralization itself, was much, much more interesting and suggestive of larger scale extensional mineralization, but also hosting potential higher grade cores in the middle or multiple higher grade cores. So following our IPO, and I should say we did declare a 965,000 ounce JORC 2012 resource pre-IPO. So coming out of the gates at IPO, we had a very clear idea about the potential that we saw, not only in the 223 deposit itself, but for repeats of mineralization in various satellite targets. We identified a new geophysical model that was again based on bringing new, much higher order processing to historical data. And that model has predicted for us a number of potential repeats of similar style of mineralization in various orientation associated with offsetting structure in the area. And we chose two different, slightly different expressions of that model to test. One, we tested at the area we call 223 North, and one at area 191. And in both of those instances, our drilling intercepted the style and orientation of mineralization that we predicted. So the consequence of that is in those two areas, in only about 4,000 meters of drilling, we identified 1.5 kilometers of new mineralization. So similar mineralization to what we see in that 965,000 ounce 223 deposit, generally broader continuous mineralization starting from around 40 meters depth, with some higher grade intercepts in there that may suggest, higher grade pockets that provide for optimization and development. So we're pretty excited about that because when you're 2 for 2, you 2 predictions, 2 tests, 2 validations, and essentially a 60% increase in mineralized strike across the project. We're now going to be essentially leaning into that this year and planning to kick off a significant additional drilling at Tunkillia. So we are going to be starting a major drilling program in April. That will include at least 10,000 meters of drilling at Tunkillia, looking to further extend some of these new gold zones we've identified, but also looking to then test predicted mineralized targets. Area 51, about 3 kilometers northwest of the 233 zone, is a very high priority target. And then we also have that model predicting a southern extension of mineralization. And that's where it gets very interesting because the footprint around the 223 deposit, that has the potential to host 5 or 6 or 7 of these bodies of mineralization that are anywhere from 1 to 2 kilometers long. And that right there has the potential to be a multi-million ounce development camp. But if we are correct, and if we're able to consistently predict and follow this mineralization down the shear zone, we're looking at potentially opening up the next 20 to 25 kilometers of shear and looking at something that's actually a district scale development.
And are all of those targets within your tenement footprint?
Yes, all very, very much within essentially a small area of the tenement footprint. There's about the Yarrabinda shear zone, which hosts the 223 deposit. There is a total of 30 kilometers of strike of that shear zone inside of our tenement. and both the western and eastern margins of that shear are demagnetized zones that we've now demonstrated or proven host mineralization. The 223 deposit and area 223 north sit in the western margin of that shear zone, and area 191 is actually on the eastern margin of that shear zone. So it opens up the other side of the shear as well as all of those kilometers of strike.
Excellent, exciting days ahead. And Tarkula, tell us a little bit about that. You've got there's a previous mine there, former mine, Perseverance, and
Correct.
You're looking around and underneath the old mine there. Tell us a little bit about the drilling you've done in 2021.
Yeah, so Tarkula is very interesting. And again, in the context of how we look at our southern hub, we're the first people to own Tarkula and Tunkillia in one hub and treat them as a combined development prospect. But Tarkula unto itself has substantial potential to end up becoming a development camp itself. And that really starts at the pit, and then what we've derived around the pit on the mining lease, but then systematically across the entire exploration area. Some of the work that we did both prior to and post IPO has demonstrated that this area, which was historically the home of the South Australian gold rush in the late 1800s, and which then became a small mining operation in 2017 and 2018, this area actually is home to a system of repeating structures that are analogous to the shear zone which created that high-grade pit. So in 2018, that pit was producing between 3 and 6 grams per ton, which is being trucked to our mill. So very, very profitable operation. But when we start at the pit, there's a couple of interesting features here. One, again, historically very underexplored, very underdrilled. Prior owners very much focused on just getting a small amount of material out, essentially thinking within the soup bowl. What we found in our initial analyses was that there was very little extensional drilling to understand either local or regional structural extensions or pursue mineralization. One of the things that we identified pre-IPO was our suspicion there was actually an entirely new gold zone at the wall of the pit that was previously unknown. And our drilling post-IPO has confirmed there's a 350-meter long high-grade gold zone, which we call Perseverance West. It starts at the south-southwest edge of the pit. It extends for about 350 meters. It's open, so it's unconstrained. And it starts from about 30 meters depth and goes to about 125 meters depth. And this is high-grade quartz-hosted mineralization where we're getting intercepts of 3 to 5 and 8 meters of mineralization at some pretty impressive grades, very near surface. So the pit itself, both in the new gold zone as a sort of southern extension, but underneath the pit in what we call the deliverance target, which is the main structure, is surrounded by broad high-grade intercepts. We haven't yet brought any of those into JORC estimation. So the potential there is to basically add some very nice high-value mineralization onto that pit. But again, that's really just the microcosm of the story. It is the fingernail scratch in the surface there. As we step out across on the mining lease scale, the mining lease being about 4 or 5 kilometers long, a lot of new technological work that we've done, including ultra high resolution aeromagnetics, gravity, and even ground penetrating radar we've trialed out there, has confirmed a series of repeating structures that we guesstimated would be there based upon a number of features. And these structures are coincident with and correlate with historical high-grade mining and some limited historical drilling and concrete sampling. So having validated those structures now with multiple tools, we're looking at potentially multiple of these high-grade open pits available on the mining lease. So we're going to be stepping out this year and testing some of those. But then again, that is still a small piece of the picture. Our work has demonstrated that, again, that Perseverance shear being the main mineralizing structure of that Perseverance mine, we identified a dozen or more parallel and cross-cutting structures that are perfectly analogous to that shear across about 14 kilometers of our project area there. So on the mining lease and on the exploration license. And what that means is we have a dozen or more faults and shears which are passing through the same Tarkula formation, the same mineralizing basin rocks, which fed the Perseverance mine, and are plumbing directly into the same Hilterba intrusive granites. And those Hilterba intrusives are the engines of basically the drivers of growth and mineralization in the Gawler Craton. They are the same intrusives that basically perpetuated, Olympic Dam and Prominent Hill in Carrapateena. So to find this model repeated so persistently over the Tarkula project area is very exciting. And where we have mapped those structures, they sort of become the third or fourth or fifth reason to go after our highest priority regional targets there, because some of those structures quite literally point directly at areas that we had already mapped out and defined as our highest priority targets. So we're now cross-validating and saying, okay, we have 30 high priority targets, which are the highest priority targets. And this year is going to be about getting out after those targets on the mining lease, but also more broadly on the exploration license, and rapidly expanding the footprint of this project.
I mean, that was going to be my next question: is how on earth do you prioritize all these targets, which you've answered there. But in terms of funding everything, how's the cash balance looking? How much drilling can you afford?
Look, we're very well capitalized. So we've ended the year at 31 December 2021. We had $11.6 million in cash. So in the first instance, we made the decision to take more capital than we really required at the IPO. It was really a decision to make sure that we had enough capital that we could really actually truly look forward 2 years in time and be fully funded for everything we wanted to do. And we already knew that we had all of these priorities for exploration, so we were going to be very aggressive. We drilled 10,300 meters post IPO. We'll be expecting to start about 20,000 meters or more in early April. Good rule of thumb for us that we kind of like to follow in terms of thinking about our cash flow is that 1 meter costs us about $200 Australian, sort of all in. So that's everything. That's drilling, that's fire assay, that's multi-element, that's geology personnel, field personnel, all of these things. And so, basically we can drill for every 5,000 meters, we budget about $1 million. So with our current budget, we can complete our 20,000 meters of drilling and still be extremely well capitalized towards the end of this year. So yeah, we're pretty positive about that. And then obviously we also pursue non-dilutive sources of value for our shareholders. We've received about $380,000 in grant funding from the South Australian government, Department of Trade and Investment. We are continuing to apply for further grants under the Accelerated Development Initiative in South Australia, which is a really fantastic grant program that the government runs essentially to encourage innovation-led exploration. So we're really right at the forefront of that. And then, of course, we'll be looking at things like ATO R&D refunds, and then also looking at harvesting some of our other assets for value. We have minor equipment and these types of things that we can dispose of. So our objective is to sort of continually raise additional capital internally without dilution while we're spending it, really with the objective of continuing to really stretch out that IPO funding and turn a $15 million capital raise into something that looks more like $20 to $25 million in actual exploration expenditure.
And a lot, so a lot of drilling ahead for the year. You said drill bits turning in April. So many targets to look at. I mean, thank you very much for that update of the company, and we look forward to hearing more about things as they develop over the course of 2022.
Thank you very much for having us.
Thank you very much for joining us today, Alex Scanlon of Barton Gold.
Thank you.